Hello and welcome to the Leaders in Cleantech podcast. Today we're having an extra episode with the team from Hyperion Search, looking at the key themes across technology, investment and talent from the cleantech sector. So firstly, welcome Steve and David from Hyperion Search.
Hi, David. Great to see you again.
Yeah, good to see you,
Thanks for
David.
having us.
People will be, of course, aware that I founded Hyperion, but it's over a quarter now since I jumped out of the business, and Stephen and David, long-term members of the team, have taken over the running of the business. I'm delighted to see both the success of you guys into the business, but also looking at what's happened in the last quarter, where I've been a little bit more, as you can probably tell from the suntan, enjoying the back garden a little bit too much. So one of the key themes from the review, and in the episode notes, we'll put a link so people can obviously access the review, but we'll talk through some of that. But one of the key themes that came out was this movement from sort of announcement to alignment. Perhaps you can share a little bit of what that kind of means, what some of the headlines have been in the trends in the last quarter.
Absolutely. Yeah, absolutely. I think it's that. I think there's a couple of phrases that we could have used, which we were sort of bouncing around the team. That announcement to alignment sort of almost promised the performance, and then even sort of ambition to execution. And I think the key theme is around execution. And David, you can jump in as well. But I think broadly, whether it's renewables, whether it's storage, whether it's e-mobility, EV charging infrastructure rollout, I think the biggest shift that we've seen is actually now it's less talking and more walking. The biggest challenge, obviously, is still, accessing that capacity, those grid constraints. Everyone's facing those challenges, but I think we've really started to see the emergence of some of the real market leaders now, and we'll talk about the sort of the transactions that we've seen from M&A and so on in Q1 that have still continued at a decent pace into Q2, but yeah, lots of deals, lots of capital still flowing into the sector, lots of M&A activity. But I think the key themes now, what we're seeing and what we're hearing from investors, as you know, I was over in Bilbao for the Energy Tech Summit back in April, and a lot of the key themes now is standalone solar. We've seen a slump, for instance. We've seen a big drive in co-location projects. We've seen a big push forward in sort of behind the meter C&I storage, and then on the EV infrastructure side, we've almost seen, and you've been around a lot longer than me, David, but we've almost seen some of those smaller operators now are starting to kind of disappear, and it's those with the most experience, the most expertise, the deepest pockets, and the most scalable business models that are really starting to take a bit of a healthy lead. And increasingly, as you know, I've been very focused on the e-mobility and the infrastructure side, and David's always been very focused on the energy storage and grid side. And correct me if I'm wrong, David, but we've seen those two worlds collide even more this quarter. Businesses like Instavolt that are implementing BESS, a lot of businesses on the fleet electrification journey now that are less worried about the vehicle. It's no longer a vehicle issue. It's actually more of an energy issue. So it's bringing in those, I guess, those deep systems and platform thinkers. When we link it to talent, we're bringing in those experts that aren't just thinking about hardware or aren't just thinking about software. They're actually thinking more about energy and energy management and optimizing and bringing it all together under one roof. So yeah, it's been a massive shift. David, I don't know if I've missed anything there, but feel free to jump in.
No, thanks. I think you've covered the key themes there. I think Q1 we saw a lot of discussion and a lot of debate about where integration was going to be. How are we actually going to, I think maybe identifying the challenges ahead. I think this quarter we're seeing and hearing from clients that a lot of them now are razor sharp, focused on actually executing a plan to tackle that. And a lot of that is shaped by talent. We know exactly what our expectations are, whether that's return on investment, whether that's expansion into a new territory, whether it's M&A, as Steve said, but it's primarily now we need doers. We need people who are going to come in and actually make this happen, rather than the strategists and the kind of bigger picture thinking, which is all relevant. But I think we're now at a point where risks are high, energy security has never been greater of importance. And I think if you don't act quickly, then you're suddenly going to get left behind, or you're going to be ultimately, in a whole lot of bother. So I think that's really what we're seeing is companies are waking up a little bit to the reality of what's actually needed, and then going out finding very, very precise talent. And whereas
Yeah.
you may have got away with in the past someone who is a little bit sort of multidimensional, I think that's still important. But I think there are fundamental, absolute must-haves that you need now in the talent, and clients are getting much more sharp and picky with who they bring in. I think that's what we've seen a lot at the moment.
Yeah, that key theme of execution is there, isn't it? Because obviously the market is, as always, very dynamic, but we are now moving to a point of maturity where, and I think we've seen that investment. You touched on that. Obviously, innovation is tough, but that seed funding, that early stage funding, from what I've seen, and for the VCs I've continued to speak with, seems to be still quite challenged. But companies who, like you say, they would have a really clear focus, a technology that works, and a very clear ability to execute. They're both receiving the money, and therefore, because of that, they're able to expand. So it's almost like that maturity that makes it somewhat harder for real startups. But actually, we're getting more traction because companies with a clear, focus and a clear roadmap to their product to the market are getting the investment and getting the talent and getting some traction. So it's an interesting theme. If anything, that is sort of kind of exciting because from a broader perspective, that means the sector as a whole and the electrification of transport and mobility is moving forward because perhaps we've got less companies, but they're doing more.
Yeah. Yeah, absolutely. I think that narrowing down of focus as well is absolutely spot on. We've seen sort of whether it's in the hardware OEM world of EV infrastructure or the software CPMS world, we've seen businesses spreading themselves thin in the last 18 to 24 months where they've tried to have just this huge portfolio or product suite. It's just not scalable. So we've seen a lot of businesses actually take a step back, take stock on things, and actually say, we're going to launch a fleet product, and that's what we're going to focus on, and we're not going to do all the other stuff. We're just going to narrow down and do a great job at that, rather than trying to spread ourselves too thin.
And one of the key themes clearly is that we've seen this year is that, and you touched on it, Steve, that kind of the integration of where storage and electrification of transport and hubs are very core. So we can dive a bit more into that. And of course, also in the latest report, you talk about data centers and energy, which of course is a hot topic and a lot of hype, but equally a lot of real challenges and opportunities there as well. So we can dive a little bit into that. But looking firstly at that kind of storage and electrification of transport hub kind of integration. You both got obviously expertise and I guess a collaboration there. But what are some of the key trends, perhaps key investments that have happened in the last quarter around that kind of that kind of hub or electrification of transport, energy storage as an enabler to a lot of stuff that's going on still?
Yeah, it's a super exciting space, and me and David find ourselves sort of messaging each other on the internal Slack and Teams channels daily with updates. There seems to be an update every week, just with and it still continues to surprise me that despite some of the more established and mature players in the market, there still seems to be new entrants coming. And despite the challenges with the grid and despite the challenges with that seed funding, we are still seeing those entrepreneurs that are still really ambitious and trying to find that gap in the market. And we've seen obviously a lot of seasons execs as well that have learned some hard lessons over the years and are now trying to find, okay, well, where does our play and where does our place in the market now? And I think one of the real standout deals this quarter for me was Decade Energy, who've had some investment from our friends over at Contrarian Ventures and Ceph Ventures, and where that sort of convergence of energy storage and fleet electrification sort of meets. They're doing some real super exciting things. I think that the latest round was around 22 million euros, and I think increasingly with that as well is you're looking at the leadership team there, and it ties back into the talent trends. It's sad to say, but one thing that we've always tried to do at Hyperion is tried to bring people from outside of the sector where there's that transferability of skills. And it's always been difficult. But we're finding it's even more increasingly difficult. And you look at some of these real emerging businesses like Decade, they've got a wealth of knowledge across transport electrification. They've got a wealth of knowledge across energy infrastructure, across storage, across energy management, across trading. And it's no
Yeah.
longer just, hey, look, I've got 5 years EV infrastructure experience. It's actually, okay, well, what's your tie-in with energy? Because it's, as I said before, it's less a vehicle issue, it's more of an energy issue now. And there's lots of interesting things. And David, you can probably talk more about the iWells and some of the key clients that we've been working with. But that full sort of end-to-end service of sort of, finance and install and managing the energy, operate and maintain, and then even, on the exchanges, being able to trade the energy and share some of the profits with customers. We're seeing that full end-to-end cycle now, which is super exciting. And, it doesn't mean to say that standalone software is dead or standalone hardware is dead. There's still an important place. And increasingly, we are seeing more and more hardware players coming to market. But I think those that are really, really grabbing the attention of the investors and those that are really, really growing at a pace are those that can bring it all together.
Yeah, it's an
Yeah.
interesting point you pick up there on that, the execution piece and people side, because obviously, I don't know if you're fully aware, but I think the 14th of July is the official 12th birthday of Hyperion. So it's, when is that? Is that today? This week, next week?
Next
Anyway,
week.
so
Next
12 years
Tuesday.
in, when we started the business, going back to your point, Steve, there were very few people who had experience in any of those sectors. That obviously it was there were some, but it was very small still. So effectively, 12 years later, we now do have not a huge pool by any means, but we have people who have seen some of the cycles. They have seen some of the maturing of markets. They have been in perhaps companies where they've got burned and learned a good level of experience from going through some of those challenges. I guess how does that lean into companies who are hiring at C-suite or senior level talent now? You touched on, Steve, being slightly harder to bring people from outside of the sector. Is that because there are so many lessons and slightly more people who've been through that journey so far? And what are sort of clients coming to you initially and saying we must haves?
Yeah,
Yeah, it's a good point, David. Do you want to
I
jump in
would.
there?
Yeah, I see it in two ways. I think I've had conversations recently where they've actually. It depends where the kind of power sits, really, because I think the companies who are investing and owning the actual end operation, particularly in C&I, many of these are coming from traditional asset management backgrounds. So they're familiar with the financing, the investment cycles that operate in those large commercial building real estate settings. So I've seen that there's a lot of demand for people who understand that domain, particularly in
Okay.
C&I. But then importantly, with alongside that, they'll then bring in people who are razor sharp on the actual technology integration. And that's where the energy piece is really important, because a lot of these companies now are looking to trade, as Steve said, behind the meter, peak load shifting, maybe looking at even revenue stacking in lots of different ways. And I think that's where understanding utilities, energy supply is going to be really important. So I don't think generally you're going to have an influx of so many people coming from outside energy, but it might be that they come outside of EV or they come outside of BESS and they understand the broader energy utilities mix. I think that's probably what I've seen. And then you're always going to get people who are just high quality project delivery people who know how to execute with high risk. We're talking sometimes hundreds of millions of pounds or euros worth of investment here. So you need people who've been there, done it. And often that's come from broader areas of infrastructure in general, I would say. So.
Yeah. Look, you touched on there about the behind the meter, the C&I space. I've just joined the board of Greenbridge Renewables, which is an integrator of solar and battery storage for C&I. So, but Steve, also in mobility, we talked about fleet transportation, electrification. You've also got those like VV and Delta doing like the big, and Millens doing these big hubs, but actually, companies themselves, logistics companies looking after their own fleets and stuff is clearly a thing. iWell, of course, one of your clients, David, doing that sort of storage piece for the C&I market. Are we seeing much more in that behind the meter in terms of investments and roles that you're seeing as opposed to perhaps some of the, established grid and utility scale stuff? Is there been a shift in that, or am I just seeing that because of my perspective at the moment?
I'm certainly seeing that. I think people are waking up now to the actual benefits to having behind the meter energy, clean energy assets, whereas a little while ago they were probably looking at that as a nice to have. Now it's actually we can really drive some significant revenue savings here. And I think I had a conversation with a client this week, and he hit the nail on the head, really. I think many of those businesses haven't really found the product market fit until recently. And this particular client was very much, we're going to focus on load shifting. We're going to focus on clients who are spending tens of thousands of pounds on energy a year. So almost that SME level, but really honing in on how do we best utilize opportunities to not only save you money, but actually generate revenue on the back of it. And I think some of these are more complex in existing facilities, because if you look at the tapestry of all the technologies, assets they have on site, you've got old school sort of boiler technology, CHP even, and now kind of the new field on-site solar, EV charging. So it's a real complex mix of technologies that you've tried to manage.
Yeah.
And I think that's where people maybe with more of that holistic C&I know-how
Mhm.
can actually add a lot of value. That's what we're finding at sea level in particular. So.
Yeah.
Yeah, no, that's spot on. I was just going to just going to tag on to that. Like we've been speaking, and I don't think there's ever been a time where all of you look at the core pillars for which Hyperion have sort of embedded ourselves, and where our core focus has been over the years across solar, storage, mobility, smart buildings, energy efficiency. We're speaking to customers who may be in the energy efficiency in the BMS and the BAS space, who are talking about, optimizing buildings and getting buildings essentially through the use of AI and other tools to think for themselves. Almost the way I see it, it's almost like you're driving a car, you put into cruise control, it tells you if you're shifting out of the lane, it tells you what speed you should be going if there's a speed camera coming up. We've had some interesting conversations, most noteworthy with our friend Thomas Kiesling recently, who's just announced his new role. But the company that he's joining now, whilst we're trying to make buildings more energy efficient and smarter, there's conversations around linking solar and conversations around putting on-site BESS in place as well, so we can store that energy. And the worlds in which we've always played, they're coming together even closer now. We were speaking again to a family office recently who we introduced to one of our clients in the C&I storage space, who, they manage, I think, 40 to 50,000 ground rents, got a huge portfolio of properties in the UK, and they wanted some information around EV infrastructure rollout, but in the same breath, they wanted information around BESS implementation as well. And we've seen that with charge point operators now. They're starting to think about site design that incorporates BESS. So the worlds are increasingly converging.
Yeah, convergence has always been a sort of an ongoing theme, and it seems more now than ever. That aside, let's have a look at the world of storage, David, and grid and flexibility, because all hinges essentially. Everything we're looking to achieve here is all hinging ultimately on the ability to transfer and generate clean electrons and get them where they need to be
Absolutely. Yeah.
efficiently. But what have you seen as the trends, big deals, significant things in the last quarter from a storage and grid perspective?
Yeah, no, it's obviously never slowing down the storage and grid space. I think what we're seeing probably in two categories. One, on the technology side, there is now a growing appreciation and realization that Europe can't do this alone. And I think for a little while there was head in the sand of we're going to have gigafactories littered in all these different places. And reality is, we know what happened with Northvolt. We know, sadly, Morrow batteries went the same direction earlier this year. So I think I was in Stuttgart for the battery show a few weeks ago, and a lot of the themes of that are now twofold. One, Chinese integration. We have to accept that we're going to have to partner with the dominant market, supply in particular, but then also concentrate on how do we domesticate our own battery supply. And a lot of that's now through recycling, circularity, rather than trying to build your own new fleet of batteries. It's about how do we better recycle, reuse, repurpose. We've done some great work with clients like Connected Energy in the past, and a business out in Norway previously called Evian, who are doing some great work in that space. I think on the best side, which is increasingly dominating our focus at the moment, utility and C&I scale, the existing challenges that were there for the last 12, 18 months remain. So grid challenges, albeit we're seeing some quite radical grid reforms going on that are helping to smooth some of those bottlenecks. The UK went through a big NESO Gate 2 reform, which had its teething issues, but are now starting to help bring the right projects into construction phase. Germany's had its Agnes grid exemption fees confirmed. It's only going to kick in 2029. So we've got this big rush of developers and IPPs now. We need to hit the ground running now before that date applies. And then ultimately, I think we're starting to see an emergence of alternative options. So long duration storage is getting more and more traction. Something I've banged on about for probably 5 years now. A client of ours, CM Blue in Germany, flow battery business, just hit unicorn status, has secured really big funding from Samsung Ventures, and they're going to be rolling out BESS for various different applications using a non-lithium technology. We've seen the same with Invinity. And then we're even seeing now sodium ion coming into the mix, led by Cattle, who are the world's leading battery business. So I think generally from a technology and a markets perspective, things are evolving and people are waking up to the realities. On the market side, I think increasingly pure wholesale or merchant exposure is not on anyone's appetite at the moment. I think we've seen, and not just UK was a standalone market for this for a good while, but now in Germany and multiple countries, Italy, we're seeing a more advanced route to market opportunities, whether it's tolling, whether it's floor structures, whether it's sort of the capacity mechanisms that are coming in. So I think generally investors are looking for that more risk mitigated approach. And that's meaning people trying to trade the assets on pure merchant is becoming less of a strategy. So no, I think it's a consolidated market in some places like the UK. Germany's flying, but then we're starting to see pockets in like Central Eastern Europe, the Baltic states, etc., where the right experienced developers and IPPs are actually getting a really strong foothold and will be able to actually see some great revenues. So, and all this sort of trickles down on the talent side to really, really good project directors, operational leaders, technical and commercial asset management. And then also, I think those people who know how to navigate the grid connection complexity, which is always going to be there. So none of the talent demands, I would say, have radically shifted from last quarter, but they're probably, as we said earlier, more and more precise. And clients are now, we're not going to compromise on these things. We need someone who's either got it or they don't. So that's how I'm seeing the storage space at the minute.
It's interesting, your first point you make, because I was speaking at CWIME in Berlin, which is a supply chain event, electrification supply chain event, essentially. And of course, you'd get a lot of companies from China there, but it's trying to balance that realization that batteries in particular, solar, obviously all these things are dominant from, and EVs for that matter, are dominant from China, but actually how do you balance utilizing and partnering with those companies and trying to maintain an element of both energy security in Europe and also obviously job creation and wealth in Europe as well. So it's an interesting dynamic, because obviously I know that we have, and you do work with companies globally, but predominantly obviously European entities, I think. So it's interesting, that balance with how do you maintain energy security and manufacturing viability in Europe, but equally not try and take on a mammoth that you just can't achieve en masse.
I think that's always been a tough balance, because, and don't get me wrong, there's some great businesses, Vercor, who we've worked with in France. There's a company in the UK emerging, Volklek, who we know quite a few members of the senior team there. And It's just the reality to do this at scale with the kind of almost how far behind we are in terms of manufacturing capability. We have to be sensible around, we're not going to necessarily have the majority of manufacturing done here. We may still have a lot of our IP. And I think what I think will emerge in Europe is there'll still be that high performance battery capability kept here. And you're looking at, there's been a shift of applications now into like even performance vehicles, F1, aerospace and defense, where there is actually energy security is more important than the price. And those markets will still require local manufacturing. But I think for the mass scale EV market and broader ESS, I'm struggling to see how that's going to change from the current dominance that we have in Asia. And then it's a case of trying to maybe look at your local assembly being done here in Europe, but ultimately the cell and sort of upstream through to midstream done overseas. So, yeah, but
then it becomes a lot more about systems
space.
integration and business model, I guess, innovation as well, isn't it? That
exactly.
A lot of our clients and customers are able to create business models and or to integrate systems.
And the smart optimization of those as well. A lot of that still lies here in Europe. So absolutely.
On the e-mobility side, Steve, obviously there's a dominance from battery and from some really fantastic cars coming out of China. I'm a car nerd, as you know. I'm really excited about some of these cars coming out of China at the moment. But actually, on that, you look at obviously the UK, Germany, some core markets, and obviously the Nordics in terms of e-mobility. The US is clearly lagging significantly for obvious reasons. They're not allowed to import a lot of cars. Just kicked out Polestar and everything else. But but there is opportunity for Europe to lead. But it does seem that again on this heavy duty transportation, there's a good lead from businesses in Europe, not so much in the vehicle side, but actually in the sort of the infrastructure and the creation of fleet enablement, whether that's hardware, software. So perhaps what are some of the key things that you've seen in the last quarter from a electrification of transport point of view?
Yeah, no, absolutely. I think, again, much like Q1, I think Q2 has been dominated by bus and truck momentum and news stories in that segment. Top of my head, the likes of Zenobē, securing 980 million for fleet electrification, which just, is huge. They've done a great deal of work in that space anyway. But then even smaller operators, and smaller startups, like Nextdash, for instance, based out of Germany, who are actually acquiring outright smaller operators, flipping their fleet entirely, and then embedding, software and energy management platforms so that that whole sort of energy piece is thought about, and over time that total cost of ownership piece will play out profitable for them. So there's some small operators, as I mentioned before, that are still finding their place in the market, and they're staying lean and they're able to execute quick and they're getting stuff done, and maybe they haven't experienced some of the hard lessons that some of the more seasoned execs, so they've almost got that boldness and bullishness to them. But yeah, certainly in the bus and truck segment, even the likes of Tratton, again, secured 850 million for, the heavy duty electrification of buses and trucks. And it's right across the board, whether it's hardware or software. Power, a big client, Hyperion, who we know well, continue to innovate and lead the way with megawatt charging systems and deploying new products. But then increasingly we're seeing the emergence of newer, let's say, hardware manufacturers like ADS Tech in Germany, who've integrated sort of a battery buffered charging solution into their DC portfolio. You've then got the likes of Elmi Power, who are doing similar out in Germany. So there seems to be sort of some movement with some newer entrants. The software market, the CPMS space is still, you've got your dominant players like Ampico, who've announced this week some partnerships with Allego to manage their network. You've got Valens as well, who are doing some great work on the fleet side to help underpin some of those big transition projects. And there's still movement, but I think some of the themes that we touched on before, that there seems to be a bit more of a narrowed focus now. So it's actually, let's not try and be sort of a jack of all trades, but let's be a master of doing one thing really, really well.
Yeah.
When we flip over to kind of the sort of the big momentum regards to trucks and buses, it's that sort of depot electrification. So it's less on strategy and now more on execution. And increasingly, as I said before, we're starting to see, players that are, partners of ours that are collaborating together, for instance. So, hardware manufacturers collaborating with charge point operators that are focused specifically on depot, and then best players that are coming in and integrating. So, we've seen this week one or two of our clients that have announced partnerships together, and it's been really, really interesting to see. Which is great. The charge points, the CPO landscape is still challenging. If we flip over to that conversation, for instance, you've got just a continued sort of M&A activity in Q2, much like we've seen in Q1. So I think the big talking points of Q1 with the likes of BEV acquiring Mayor's UK network. As we shift into Q2, we've seen the likes of PodPoint acquiring EO. We've seen Instavolt actually take a step back from some of their European operations. So they sold their Spanish and Portuguese network. I think it was some 5,500 or 6,000 assets were sold to PowerDot, who again, 2 years ago, were not really a familiar name, but they seem to really be ramping up operations over in Europe. And yeah, there's a lot of activity still, but I think it's much more focused around, I'd say, less volume. I think there's still origination, and we're still seeing a need on the talent front. We're still seeing a need for commercial talent who can find those sites to develop. But I'd say it's more around trying to find those substations where there's additional capacity that they can tap into, rather than purely brand new greenfield sites. Because as we've said, those grid bottlenecks are just, they're really, really, really tough to tap into at the moment. But yeah, lots of momentum, that bus and truck market. When we look, we've historically done a lot of work in that sort of public charging space as well. And we're now starting to see those Levi contract awards coming to fruition. To charge you, we've done a lot of work. They've been getting a lot of wins with local authorities in London and the South. There's an Irish operator, actually, ESO, who won a West Midlands contract. I think it was around 176, 186 million, which was a major contract. So there's still a lot of activity in rolling out infrastructure. But I think with some of the more mature players now, it's more around utilisation. So one of the key themes at Intercharge, the Hubjet conference that we've attended for the last 5 or 6 years ago last year, was around utilization and the pathway to profitability, and less around we want to have the biggest networks, but more around we want to have the networks that are attracting the most footfall. And the exciting thing for me here is we're starting to see some of these AI integrators and MSPs playing a big part here. So, real promising businesses like Available, for instance, coming out of Germany, that are helping charge point networks with almost predicting things that are going to go wrong before they go wrong through the use of AI, and making sure that networks with these reliability standards that they're needing to adhere to and uphold, making sure that we can actually, we can be ahead of the curve before things go wrong. So actually, the customers, by the time, we figured out there's a fault on the customer's side, there's no fault, and networks can continue to run. So yeah, that big focus on utilization is then having a massive impact on the talent side as well. So we're seeing businesses really focusing on that network performance, that asset management, bringing in people that have, and I'm almost contradicting myself here when I was saying before that, it's hard for people outside of the industry to come in. I think where there's loose links, where people have managed critical infrastructure, that critical infrastructure piece now, I think both on storage and e-mobility, these assets are being defined as critical infrastructure now, especially when you look at the figures coming out of SMMT, in terms of the EV adoption. I think Germany have just released figures this week that it was sort of 28% market share for EVs, which is probably still not where we need it to be, but it's month by month increases. And, when we start to get into that, a third of market share is, adopted with electric vehicles, we've got to be really, really, that infrastructure is critical, and we need to make sure that we're keeping on top of it. It's working. You're not going to turn up and it's not going to be any faults with it. So, yeah, there's still challenges, mainly centered around policy and uncertainty. But, we've seen Europe really digging the heels in and pushing back. And, in terms of their net zero targets, they're pushing back and saying, no, we don't want to dilute them. We need to stay on the pathway. We've obviously, with the UK election, a certain Mr. Keir Starmer and him soon to transition out of number 10. There was talk around the ZEV mandate being diluted somewhat, which, again, the last time it was diluted, there was a lot of uncertainty with operators. Some went under. There was a lot of uncertainty with investors. So I'm less worried this time because I kind of think that the industry's moved on somewhat. We aren't where we are today because someone has announced a certain shift in policy. We are where we are because of the private companies that are really putting the money where the mouth is and leading forward with investments.
Yeah. So picking up on that, could you touch on this around some consolidation, some M&A? And when that happens, of course, there's both opportunity because there's scaling, and then you need people able to develop those businesses and jump into bigger businesses doing bigger stuff. But obviously, you're also a victim sometimes, some very good people, victim of when there's an M&A and a duplication of roles. Without going into too much detail on that side, what are some of the roles that you are now being asked to find us in those companies that are in that fast growth and perhaps have been on the upside or the buy side of that M&A activity? What are perhaps some of the key leadership roles and challenges that you're coming across in the last quarter?
Yeah, there's a few, to be honest. I think certainly you're right. I think when there's a merger or an acquisition, it does present opportunity, but it also does, especially if you've been working for the smaller business that's been acquired by a much larger entity. Some people just aren't suited to those bigger enterprises, and actually, they joined a startup because they wanted to have a bit more impact and tangible involvement and autonomy, and often there's a bit of a fallout there. So. Yeah, I think there's two ways of looking at it, but I think certainly, you look at, if a company is acquiring another company, they're clearly doing something right and they're on that upward trajectory of scale. So it then becomes about like building out those functional departments and those integrators and people that can actually put the right systems, the right people and the right processes in place. So we've seen a few more transformation director roles coming out recently, which has been quite interesting. And then on the commercial side, we've seen if there's a UK operator that has been acquired by a European operator, for instance, it's localized market knowledge, I think, is still very much in demand. So, we've seen what it's like, to manage a different geography remotely from one country to the next. It's tough. It doesn't work. There's nuance to it. There's different regulations and different things that you need to be mindful of. So I think we've seen a real focus on actually on the ground, boots on the ground talent. So, that go to market commercial expertise is still in demand. Where we're looking at that cross border expansion. We've done it in, the Nordics, for instance. Can we now take it across to, the broader pan-European landscape? So there's still a big focus on the commercial side. David, I don't know if that translates into your world as well, but feel free to jump in.
No, definitely. I think from the BESS and the renewables side, I think there's been a drop off on pure development roles. So a lot of them are now already acquired the pipeline, either developed it, originated it themselves, or they've gone and bought significant pipeline elsewhere. And I think what I'm seeing more towards our segments are execution. So across the EPC life cycle, so high level engineering, procurement and construction talent, operational leadership above that. You look now, everyone's using AI, but I think there's that balance between streamlining certain processes and efficiencies versus the human side. And a lot of the demand we're asking for now is people who have that ability to manage that, but also be able to zoom in and out of let my teams take care of the day to day, but then also be able to zoom out and think about how are we driving operational excellence across everything we do. And then I would say particularly relevant to storage and renewables, asset management is probably the number one demand we're hearing at the minute. So not only people who can come in technically manage the assets, but it's that piece I said earlier around all the sophisticated tolling, revenue management side, which is quite complex. And a lot of those people are coming more from finance and economics, coupled with some people who understand really how assets are dispatched, the grid side, all that kind of thing. So I think we're probably more EPC and post COD hiring I'm seeing at the minute. And then I think one thing, Steve, we've seen generally is a demand now for niche board level expertise. So they may already have a pretty strong founding team and board that understand their own landscape. But we've done this with a flow battery client of ours at the minute who needed some direction into the broader utility segment, which they didn't know as well. And we've been able to just not officially announced yet, but been able to appoint a new chair for them who understands that world inside out. So yeah, I think there is a healthy demand at the moment, but it's, again, echoing the same sentiment. It's about real precise missions that these people are doing rather than those kind of generalist hires at the minute. So.
Okay. Well, certainly people can obviously get hold of the report, which has both an indication of some of the roles that you're working on at the moment, but also quite a lot of people moves in there across the renewables, e-mobility and storage sector. So you can take a look of some of the key players that are moving about and get a flavour for some of the roles that are being hired and recruited across the sector at the moment.
Yep.
Let's touch on data centres, because of course it is a topic along with AI. You can hardly have a conversation without it coming up, but at least from an overview, because again, often the hype comes before the traction and the action. But what are you seeing from that perspective of energy? And we're already starting to see data centers talked about in sort of power capacity, gigawatts versus bytes, if you know what I mean. So it is very much an energy play. So what are perhaps some of the headlines or some of the things that you're seeing from that sort of data center energy world?
So yeah, we've seen, obviously we have a lot of European focus, but we also do work in North America as well. And I think when we look at data centers, it's primarily from the energy infrastructure side, obviously. I think what I'm hearing and seeing is the challenge no longer is supply. So I think there's been a lot of regulatory change, particularly in the US through the FERC, where it's now making renewable developments much closer to the actual use case for the data center. So I don't think we're no longer fighting that energy supply, renewable energy supply mission. It's more the connectivity. It's that integration with the grid. It's that understanding of transmission planning, of resilience, kind of backup systems. And I think there's this big conjecture at the minute as to, can batteries really solve this flexibility issue on their own? And we're always team electrification, and we will say, yes, that can happen. But reality is there is also that elephant in the room around, do we also still look at gas assets for flexibility? And I think we're trying to work with clients to bring them the talent that understand the storage and renewables piece. But I think a lot of the talent demand that we're seeing is more around those real experts around power systems engineering, grid engineering, people who understand control system optimization, dispatch optimization. And it's probably the most challenging people to find in the market, because sometimes these people are hidden. They're not publicly looking for roles, and often they're on the operator side, or they're hidden in a utility. And we've got to go and extract them and convince them to come onto the supply side. So it's definitely a growing movement. I think Europe is still finding its feet on where that's going. But I think a lot of the developers, IPPs we talk to, naturally have to have data centers as part of the portfolio planning. But again, the talent needs are going to be the same. And we've done a really good piece on the market review around what actually that talent really is, not the buzzwords, not the kind of high level fluff side, I would say, but actually the real tangible people that are needed to make this integration happen. Because if we can't navigate 2-year grid queues or transmission integration, then unfortunately this infrastructure is going to really struggle to take off. So yeah, that's how I'm seeing it, Steve. I don't know how you're seeing it from your end.
Yeah, no, exactly spot on. I think looking at the landscape, this AI and this data center boom. I think data centers aren't constrained by ESG, and we talk about this in the market review. I think that it's physical reality, so those grid constraints, and I think fortunately, we're talking about seasoned execs and people that have been there and seen the scale and done it before. I don't know if you've seen David, I'm sure you did, but previous podcast guest and previous client actually at GridServe, Toddington Harper, is directly trying to address that sort of critical power constraint with the new venture gigatons, looking at that renewable energy generation, water production, compute capacity, all into an independent platform and trying to solve that critical power constraint. And we've seen it with the likes of Renalfa DC that are doing similar stuff, integrating renewable energy and trying to sort of provide additional capacity to the already constrained grid. And with that, as I said before, it's those deep systems and platform level thinkers that we're seeing on the talent side, those that can integrate and converge all of these worlds together. So yeah, I think you've nailed it spot on, David. But yeah, that's just my piece. I think the exciting thing is there are companies out there that are trying to address this, and Hyperion's play is working with those companies that are trying to integrate those renewable technologies to support this data center build out. And then, it will then eventually, it's like anything, it's an evolution, it's the build out phase, but then it becomes around the asset management phase as well. So talking about the smart buildings piece before, increasingly seeing and hearing and speaking to more clients around, that real estate piece where data centers fall under. So making a building speak and think and operate for itself. The same will apply for data centers. The sheer amount of water and the sheer amount of power needed to cool these big industrial units is obscene. So yeah, I think renewable energy players have got a huge part to play in this, and yeah, that's where we're involved and where we see the real growth moving forward.
Okay. Well, people can obviously take a much deeper dive into the market review where that piece of work is done. So thanks, guys, for sharing some of that. So obviously, we'll put a link to the review on the episode page. But clearly, if you go to the Hyperion Search website or LinkedIn page, I'm sure you'll find some links there also. But great to have those insights on both the people and the trends from you guys. And hopefully, we'll see in a quarter's time what has evolved yet still. But thanks very much for sharing that. And like I say, from an audience perspective, dive into the links and you'll find much more than we've been able to cover in the conversation this morning. But great to join us both, guys, and we'll speak to you again soon.
Yeah, thanks
David.
for
having us, David. Yeah, appreciate it.
Appreciate it.